Okay, welcome everybody to another session, another weekly training, Forex Bootcamp training. Today is what the 11th or the 12th? Let me check real quick. See the date. Today's the 11th. Okay, so May 11th. Wow, fifth month. A couple more to go before the end of the year. So thank you so much for dialing in, tuning in. Make sure you have your notepad and your pen handy so you can take some notes. We're gonna pretty much Today's session is going to be about analyzing the market. So I'm going to look at a couple of different pairs on my computer screen here and help you with your technical analysis. Now, another thing you want to also incorporate in your training or in your studies is fundamental analysis as well. Now, in order to get a handle what fundamental analysis, and that's pretty much, reading the news, finding out what's coming out next week. I invite you guys to go to a website called Forex Factory. So I'm going to go ahead and type that in here so that way you guys could, you could just go to my website at Metro. Metro Traders, metrofxtraders.com. And on my site, there's a link for Forex Factory. So definitely bookmark my website. That way you can always have this as a resource. So you just go through the top panel here, and on this button right here, Forex Factory, you click on that. That's going to give you the calendar for pretty much the week, the month, and you use this calendar for news. Okay, this is where you get the news reports that's happening, and then you go to the section and you click on more. I'm going to rewind the video to make sure to see what I clicked on, and this is the news that's going to be coming out in any pair that you're trading. Okay, so Saturday, Sunday, not much is going on. Okay, but if you look at Monday, you notice that there's a lot of different pairs coming out with news. Now, red folders means you do not want to trade when you see a red folder, because the market will definitely either will be very volatile. Yellow folders, brown folders, okay, and you could trade on these folders, but make sure you don't trade during these times. Um, you want to trade after the news come out, and these are different, you know, news headings and forecasts of the news based on that currency's geographical information. So if you're looking at euro, dollar, you see the EU economic forecast, and that be coming out like a 3 a.m. Well, it's tentative. There's no time on it right now. But if you look at, let's say, 9 a.m., you have the FOMC member Jefferson speaks. So yeah, you want to avoid trading during these times. So if you try to get into a trade before that time, you want to exit out that trade. Okay, unless you have proper technical analysis under your belt and you want to ride the news, either going up or down. Because if it's positive news, the candle or the actual USD would go up. If it's negative news, it'll go down. So you want to try to avoid trading in these time frames. But you also want to piggyback right after the news come out, and maybe take a trade after the news. And the trade that you take, make sure it's going in the momentum of the direction of that candle. So please do your due diligence before you actually place a trade. It's important that you definitely break down the trade with your technical analysis. So let's go back to the chart. Now, in this chart, we have DXY. DXY is a US dollar index. Okay, so if you want to know the direction of any currency for the dollar is the standard, right? The US dollar is the standard for every market. And you'll notice that GBP USD, NZD USD, Canada CAD USD. So everything is pretty much off the dollar. So this is just a dollar index. So if the dollar index is either higher or lower, based on your analysis, it's a good opportunity that those pairs that you're trading will be higher or lower as well. So you want to analyze the dollar, and then you take that information and apply it to any other pair that you're trading in the market. So let's take a look at the dollar to see, is a dollar either on an uptrend or is a dollar on a downtrend, right? So this is a 6 month chart. For 6 months, this is what the dollar was doing. Okay, so what you want to do is you'll take a look at this and say, okay, are we in an uptrend or in a downtrend? Okay, so looking at this particular chart, we see that the dollar, if we take our arrow, we see that the dollar right here was on a downtrend, right? And then it retraced and came back right here. This is a retracement, okay? And then it pivot lower, right? Pivot lower. So because right here, it made a lower low, okay? So you have your low right here, retrace, and then made a lower low. This lower low is lower than this low, okay? This is called a lower high, okay? So it started here, came down, went up, and then came down. Now, there's a tool called the Fibonacci tool. This tool called Fibonacci retracement, you could apply it on the chart and you see where did this market bounce off of. If you stretch it from the, lower high here, stretch it all the way down to the lower low, which is right here, and you pull it to the right, you'll notice that at this particular low right here, when it retraced, it went above the 50%. Okay. So during 61.8 and 50% is where you would want to take a trade. Okay. Because if it goes above 61.8 or above 78.6 or 88 or 100, it's actually going to be trending higher. Okay. So these are your pivot points. Okay. But since it didn't go higher, okay, what you want to do is take a trade above 50% and around 61.8. Okay, this is the sweet spots. Okay, now, and then they made a lower low, right? So now we could move our fib and take it to the next lower high and continue to stretch this out to the lower low right here and see, okay, it's actually bouncing back up, right? It retraced, right? And if you look at the chart, what happened? It started retracing above the 68.8. All right. So it looks like it wants to now go higher, right? Because now we have a lower low, then we got a lower high. And then we got this low right here did not go below this low. Okay. So there's a reversal going on here. When you don't see a lower low, there's a reversal. Okay. And then it started trending up, right? Now, over here, if you look left, it broke these levels here and started trending higher. Then bounce off this line here, 38.2, and start making a higher high because this high is higher than this high. Okay. And then you see this white candle right here. This candle is now higher than this high. So all of a sudden it's trending higher, right? But you have to now go down to the lower time frames to see if it'll bounce off 78 or bounce off 88. Okay. Because what you want to do is if you monitor this with patience, you see that it starts to bounce off these levels, then you want to take a trade going lower. Okay. You want to take a trade going lower. Okay. But if we look at this based on a 6 month time frame, okay, when you look at this chart and we look at this particular area right here where it retraced from, right? Because this is a retracement right here, then it made a low. So what pushed this low to make a lower low? Well, the orders that were placed in this zone right here. Okay. Now, what I typically do in this particular area is I'll create a little box right here, and I say to myself, okay, if any candle on the right is above this box, okay, I'm looking at buys, okay, because this particular box creates your desired reversal points, okay. So if you would take a line and you put it on top of the box, you'll notice that it started making higher highs, right? It bounced off the line and started to make higher highs, okay. So if we were to take a look at this, we have to be patient in our analysis because there's some levels that we need to see before we take a buy trade. What we're looking for right now is reversals because we're in a downtrend. Okay, it didn't break this level here. And the minute it starts to break this level here, you look for buys. Okay, so if you want to stretch this box out to that level, it literally has to go above this level in order to take buys. Okay, to put an order for an uptrend. Okay, but right now we need to focus on taking sell orders because we're not at this level here. Okay. So it bounced over here, as you can see, and started to trail down. This is a shooting star. Okay. And we want to focus on sells. So let's go down to the lower time frames to see what we can see. Okay. Based on 6 month, we're going to go down now to the 3 month. We're doing a top down analysis. Okay. See, as you can see, it's really close to that red line right there, okay? But it didn't quite get there, okay? Now, I think in some of my past videos, I talked about order blocks and also fair value gaps. So basically, an order block and a fair value gap. Order blocks are like the top of the top, okay, like a supply zone. We can call this an order block right here, okay? Now, the way you place an order block, the candle before the bullish engulfing candle, you make a square rectangle box and you stretch it out. That's an order block, okay? Based on the top of a zone, okay? So that's an area of interest called an order block. But then we also have a fair value gap, okay? What is a fair value gap? A fair value gap is where two wicks, there's a wick here underneath this white candle, and there's a wick here underneath this candle, above this candle here. So these two wicks did not touch. So whenever these two wicks do not touch, you have yourself a fair value gap. And what happens is the market has to come back and fill that gap as it did right here. Okay. It's within that box. It fills that fair value gap. And then now it can now trend lower. Okay. Because if it bypassed that fair value gap and broke your order block, then you're looking at maybe taking buy orders instead of sell orders. So since it did not go above that red line, you're looking at the trend continuing, which is a downtrend, okay? Because we're in a downtrend. All this information here, that you see on the right, is just a retracement, okay? That's just a retracement. And you go down to the lower time frames, you'll notice what I'm talking about. Now we're going to go down to the 1 month. As you can see, it's pulling away from that fair value gap. It's making lower lows. Although right here we have ourselves a sideways movement. And what do we call sideways movements? Well, based on the Bible Sig Candle book, you call this area right here consolidation. This is going sideways. Now, rule of thumb, you do not want to trade in a consolidated area. Okay, stay away from sideways trades because you'll get stuck. You don't know whether the buyers or sellers, see, they're fighting each other in this area. You don't know if they want to pull the market up You don't know if they're going to pull the market down. So what you want to wait for in a consolidation is a breakout of the box. Okay. So you put your highs and your lows and you just wait for breakout and then a retouch of the box for a buy trade, breakout of the box, retouch of the box for a sell trade. Okay. Now, I go down to the lower time frames. That was a monthly. Okay. So we go down to the weekly. So in the weekly, as you can see, the dollar is still going sideways. Okay. We got to wait for a breakout. All right. Then we go down to a lower time frame, go to the daily. Again, sideways action going on here, right? Not a lot's going on. So you really got to wait and be patient to see what kind of breakout. Is it going to break out on the upside or is it going to break out on the lower side? So we're going to continue to watch this over time. Okay. So don't really want to trade in there, right? So go down to the 4 hour. We're still in there. Okay. Now, some people would trade in a consolidation. I don't recommend it, but some people trade on the top and then they'll take a sell order and wait for it to hit the bottom, and then take a buy order, wait for it to hit the top. They could go back and forth based on this consolidation. But again, I don't recommend it. You want to actually have a solid trend, okay? Because if it's going to continue to trend lower, it needs to break out of the box, retest the box, and continue going lower like that for a nice solid downtrend, okay? But since we're analyzing the dollar index, we notice that they're waiting for some news to come out. Okay, usually when you see consolidation, a sideways movement, some news is probably going to be announced on Monday, and then it'll break the box either up or down. So you gotta wait. But you could use this information for other pairs as well. So let's now pivot to a pair that has a dollar in it, right? So let's take a look at, let me see, AUD USD. So let's analyze this pair. Okay, I'm going to erase everything and we're going to analyze it together. So the first thing we want to do is what? Go to the 6 month and see the overall direction of the market. All right. So this is 6 month worth of data. So every candle is 6 months within the candle. Okay, so what do we see? We see some highs here. So it hit its peak, all right? And now we see a reversal, okay? So if you go to the low here and you take your Fibonacci tool, fib retracement, take it from the bottom, stretch it all the way to the top. What do we see? We see it going up and then came down to these levels here and bounced off 78.6. Okay. And what do we have down here? We have wicks. Wicks are pretty much bouncing off 78.6. Okay. Now this particular wick bounced all the way down here, almost hit 100%, but it came back up and then it came back down to hit the 78.6. So we can anticipate, if you look at these candles here, nothing really closed below 78.6. So I would anticipate the market bouncing off that level and heading upward for an uptrend. Okay. All right. So let's take a look at that and see if we're in the right direction. So I'm going to go ahead and drop down to the 3 month. Take off the fib. Drop down to the 3 month. Okay. This was my trend line. If we go back to the 6 month, we want to put support underneath that line. I normally take a rectangle box. I'm going to create support right here. Okay, now to stretch this out, you go to the actual gear, extend right, extend left, and it makes that box for you. You can also find that box on the left side. It's called a rectangle box right there. Okay. Now, we'll put a trend line right underneath it and see what we can find. Okay. Because it's bouncing off this box. So let's see what's going on the 3-month. As you can see, these white candles are bouncing off. These are bullish candles. Okay. And we have a couple of touches within the box. Okay. Okay. But none of these touches here close below this low. Okay. Because if it did, it would continue to go lower, right? So it's actually making, higher highs. All right. So we go down to the 1 month. Okay. The 1 month, it came inside the box, bounced off, and made a high. Then retrace. Now this is lower than this low, right? So that's considered a lower low. But then came back up, and now it's higher than this box here. This candle here. Okay. All right. So we see some movement going on because now there's no more lower lows. This candle is not lower than this candle. All right. So we see a reversal happening. Now go to the 1 week. All right. As you can see in the 1 week, it started to get higher over here. Okay. But we have to be patient because on the left side, what do we see? It came down here, came up, made lows here, but it did not go lower than this low. Right. So it's going up, came down, and my guess is it's going to start to go higher. Okay. Because we have multiple touches inside the box. 1, 2, 3 wicks right here. So triple bottom, right? Whenever you have a triple bottom, based on the candlestick Bible, you have reversal. Okay. Because when it made this touch here, it didn't go below this level here. Okay, so we're going to continue to go down to the daily. Okay. Okay, so what is the daily telling us? Okay. Some of you guys already know that I talk about the head and shoulders pattern. Here's a head and shoulders pattern right here, which is a reversal for a downtrend. Okay. But it failed to continue its trend. Okay, because you got 1, 2, 3 here, triple tops. Okay. And you have the white candle above the box that we're in. Okay. This white candle is above the box that we've created. And this white candle is considered a bullish engulfing candle because it's bigger than the candle before it. Okay. So that's a nice indication that it's going to go higher. All right. Because you have a bullish engulfing candle right there. So let's go to the 4-hour. All right. So as you can see, we were kind of right based on our analysis here. So here's your uptrend. We took that uptrend from the 6-month chart, right? There's your uptrend right there. All right. Now you continue to, go down to lower time frames. You want to place an order on the 15-minute. Okay. In the 15-minute, you want to wait for this area to come down to the actual trend line. And once it bounces off the trend line, you want to take a buy order based on that. So you got to be patient enough for it to come down closer to that trend line before taking a buy. All right. All right. Because you got higher highs, lower highs, higher high, lower low. Okay. Now it's actually trending lower because it needs to come back down over here to hit the trend line and then bounce off the trend line to go higher. Okay. Now, remember, you need to find a order block and you also need to find a fair value gap. We've created our trend line. So we know that number one, our order block is going to be down here. Okay. Order block's down here because it bounced off this whole area. And now what we got to find is a fair value gap. Because remember the wicks is an area down here that has got to come back down in order to fill that area. Okay. So if we look at these 3 candles, you have to have 3 consecutive candles. The middle candle is a separation between the first candle and the third candle. So that's your fair value gap right here. Because those 2 wicks, the wick above and the wick below, they're not connecting. So it needs to fill this area and then go back up. So that's why you see a reversal happening. Okay. All right. So here's your order block right here. So it's got to travel all the way down here, bounce off this fair value gap. Sorry. You see this fair value gap? It's got to bounce off the fair value gap in order to go higher. Okay. So you can wait for buy trades or you can start putting in some sell trades. I always recommend always going in one direction because you don't know when it's going to reverse and go higher and you don't want to get stopped out. So just wait for it to come all the way down, hit the fair value gap, bounce off of it by you monitoring it, and then head towards making higher highs. Okay. So that's my analysis. That's what I pretty much look for in the market. We'll dive into some more material next week. I need you guys to I need to teach you how to look for fair value gaps and how to look for order blocks. Okay. Um, and you have to determine what type of trader you want to be. Do you want to be a swing trader? Do you want to be a day trader? Or do you want to be a scalper? Because a scalper takes a look at the 1 hour chart and enters on the 15 and the 5 minute. Okay. So if you're a scalper, analyze the 1 hour chart and then drop down to the 15 minute and then enter on the 5 minute. So let's take a look at that real quick. This is the 1 hour, right? So we're going to put supply. This is supply on the top, right? This is supply. And we're going to look at the lowest low here is demand, supply and demand, right? Now, again, your fib tool is really important. So you take it from the low to the top. And you notice that it bounced off the 50%, okay? And went started making higher highs, but now it's exhausted. It's not making any higher highs. It didn't make, go above the supply area. Now it's just trending lower, okay? Why is it doing that? Because there's a fair value gap that it has to fill before it trends higher. Let's take a look at that. So we have demand down there, and we need to find gaps in the market, okay? What do you see here? Look for 3 candles consecutively. The top of this wick right here, and the lower part of the third candle's wick is a fair value gap. It tried to come down and touch it, but it didn't. So the market still has to come down and fill this fair value gap before it starts to trend higher. Okay. So that's why you see a pullback happening here. Okay. Didn't make any higher highs, right? So it's pulling back because it needs to come back and fill that fair value gap. Let's see, you see like a doji candle, okay, indecisive candle before the bearish engulfing candle, which is telling you that it's pulling lower. Okay, that's why you need to understand how to read these candles, because these 2 candles, doji candle or shooting star, however way you want to look at it, and then you have a bearish engulfing candle, which is bigger than this candle. So you're looking at sells right here, looking at taking the market lower to that fair value gap. So to practice this in your back testing, like right here, look, this wick and this wick did not meet. All right. So this could be another fair value gap where the market needs to come and touch and go higher. So you have this fair value gap and you have this fair value gap. You want to make sure you place an order, buy order on the lowest fair value gap. That way you can have more pips that you can collect in your order. But it may come to this particular fair value gap and bounce off. Okay, so that's why you want to wait for buys, not so much reversals. Okay, because there's not a lot of pips from here to here to make a significant profit. But if you go from wait for it to come down here and then bounce off, you have more pips. Because once it bounces off, it's going to make a higher high and go above these levels on top. Okay. So with that being said, it's the end of my training.